Are you thinking about closing your company and striking it off from the Companies House register? Well, stay tuned and we'll tell you everything that you need to know. Hi there, Nicholas Campion here from First Formations, the UK's leading company formation agent. The process you must follow to voluntarily dissolve a company is relatively straightforward and inexpensive. However, to close a company in this way and get it struck off the Companies House register, the business must be solvent, that is, able to pay its bills. Additional criteria also apply, and you need to take certain steps to close the business properly. Now, in this video, we're going to discuss all the requirements and explain the process in detail. And by the end of the video, you should have a clear understanding of how to dissolve a UK registered company. Just to let you know, we've also included useful links in the description below to gov.uk guides and forms that we have mentioned throughout this video. So, just what does it mean to dissolve a UK company? Commonly referred to as company dissolution or strike-off, dissolving a company is an administrative process that results in the permanent closure of a solvent company. It's a cheap and simple procedure that can be carried out after approval from the board of directors. There are several reasons why you may need to dissolve a company. Perhaps the business is no longer viable, or you've decided to move on to something else, or retire altogether. It could even be the case that you set up the company as a dormant company simply to protect a business name that is no longer required. Whatever the reason, the company must satisfy the eligibility criteria to be eligible for voluntary dissolution. Namely, that it must not have changed its name in the last 3 months, it must not have traded or carried on any business activity, or sold or any of its assets in the last 3 months. It must not be threatened with liquidation, and it must have no ongoing payment agreements in place with its creditors, for example, a company voluntary arrangement or CVA. If the company satisfies all eligibility criteria, the directors can generally approve the action by passing a board resolution. You could do this at a board meeting or by written board resolution. If you're the company's sole director, you could pass a resolution on your own. Where there are 2 directors, both must agree, and for companies with multiple directors, a simple majority of more than 50% can usually approve the resolution at a meeting. However, before this decision can be made, you must close the business properly before sending a formal striking off application to Companies House. The preliminary steps you need to take are as follows. The first step is that you must cease trading at least 3 months before applying to strike off the company. If you have outstanding orders to complete, you'll need to deal with these as soon as possible and collect all payments that are due from clients. Should any trading or business activity occur in the 3 months before submitting your application, it may be unlawful and Companies House could reject your dissolution request. Step 2 is to notify all interested parties. You must announce your plan to strike off the company to anyone likely to be affected by its closure, including, where applicable, shareholders or guarantors, creditors including banks, lenders and loan guarantors, employees and workers, customers and clients, suppliers and service providers, landlords or tenants, local authorities, managers or trustees of your employee pension fund, and HMRC and the Department for Work and Pensions. Doing so ensures they have the opportunity to object to the company being struck off before the process completes. Step 3 is to deal with all business assets. Now, this is important because if there are any assets still held in the company name at the time of dissolution, they'll become bona vacantia or ownerless goods and will automatically pass to the Crown. Business assets include things like land and buildings, equipment and machinery, stocks and materials, intellectual property, shares held in other companies, cash, credit balances in business bank accounts, and any payments due from HMRC or elsewhere. In most circumstances, you could apportion the assets or the proceeds from their sale between the company's members. That being said, you may need to use some of these funds to pay the company's final bills and any outstanding debt. And don't forget, extracting assets from the company needs to be undertaken in the normal manner. If you take any of the assets or sale proceeds for yourself, you may be liable to pay capital gains tax on the amount that you receive. However, if the proceeds or value of the assets amount to more than £25,000, HMRC will treat the distribution as income, which will be liable to income tax instead. In either case, you should check whether you are eligible for business asset disposal relief, previously known as entrepreneur's relief. This could reduce the amount of tax that you pay on the proceeds that you receive. Up next is step 4, pay your employees. If you have employees, you must adhere to the rules on redundancy and pay their final wages, including any holiday pay and benefits. Some or all of your staff may also be entitled to statutory redundancy payment. You must tell HMRC when you stop being an employer. You do this by submitting a final full payment submission or employer payment summary after the last payroll run and then closing your PAYE scheme. Step 5 is to settle all outstanding bills and debt. You should not dissolve a company if it has any debt at the time of the application. If you do attempt to do so, your creditors can object to the company being struck off, resulting in Companies House halting the process. Therefore, you must ensure that all business debt in your company name is settled in full before applying for dissolution. This includes loans, credit card balances, rent, supplier invoices, utility bills, staff wages, and final tax bills. Step 6 is that you need to deliver your final annual accounts and company tax return to HMRC. You must state that it's the final set of trading accounts that you are dissolving the company. You don't have to file final accounts with Companies House, although it is recommended. If the company is registered for VAT, you'll also need to cancel your VAT registration, send a final VAT return to HMRC, and pay what you owe. Moving on to step 7 is to end any contracts that you still have. If the company has any ongoing contracts or agreements, for example with suppliers, service providers, utility companies or landlords, remember to end these before dissolving the company. However, be sure to review the terms and conditions of each contract for details of termination clauses and required notice periods. And lastly, step 8, close all company bank accounts. You should pay any bank fees or charges that are due, withdraw or transfer any credit balances, and close all accounts before applying to strike off. Any company bank accounts that remain open will be frozen from the date of dissolution. Remember that any withdrawals or transfers should be carried out in line with the normal rules. For example, if credit balances in the accounts are comprised of profit that are to be distributed as dividends, you will need to declare the dividend in the usual manner. If you do not close the accounts and there are funds remaining when the company is closed, the money will become inaccessible unless the company is then restored to the register. Once the business has ceased and your company meets the eligibility criteria, you are now ready to apply to Companies House to dissolve the company by sending a striking off application, Form DS01, to Companies House. You'll need to provide the following details on the form: company registration number, the company name in full, and authentication of a majority of directors. Enter their forename, surname, and the authentication date. You can complete and file this form online or send a paper application by post. However, you should only use the paper form if you cannot apply online. The filing fee online is £33 and £44 for postal applications. If you would like First Formations to take care of this on your behalf, we can provide a company dissolution service for only £89.99. Included in this price is the Companies House filing fee, completion and filing of the Form DS01, a board resolution to approve the strike-off, and continued use of our London registered office and London service address until your company is dissolved. Our team of company specialists will take care of everything. All you need to do is sign the board resolution and electronic dissolution application to get the dissolution process started. We can also provide help and advice on any issues or obstacles that you may face. A link to our company dissolution service on the First Formations website is included in the description below. No later than 7 days after applying to Companies House, you must send a copy of the DS01 form to all notifiable parties, including members, creditors, employees and workers, managers or trustees of any employee pension fund, and any directors of the company who did not sign the application form. Failing to notify relevant parties is a criminal offence that can result in an unlimited fine or, in the most serious of cases, up to 7 years in prison. Any person convicted could also face disqualification from being a director of any company for up to 15 years. Now let's look at what happens after you've applied to Companies House and notified all interested parties. Upon receiving your application, Companies House will confirm that it has been completed correctly, register the information on the company's public records, and then publish a statutory notice in one of the following gazettes. The London Gazette if your company is incorporated in England and Wales, the Edinburgh Gazette if your company is incorporated in Scotland, and the Belfast Gazette if your company is incorporated in Northern Ireland. The strike-off notice will appear in the Gazette for at least 2 months. This ensures that all interested parties are aware of the company's decision and have an opportunity to object. Provided there are no objections to strike off during this time, a second and final Gazette notice will be published announcing the company's dissolution. At this point, the company is officially dissolved by Companies House and struck off the public register of companies. Further guidance on how to dissolve a company is available from gov.uk, and a link is included below. If your situation is particularly complex, we recommend seeking professional advice from an accountant. And that is it. The procedure for dissolving a company is straightforward, but it's not suitable for every situation, and it doesn't happen overnight. If you're considering dissolution, you must ensure that your company is solvent and then establish the steps required to close the business before applying to Companies House. If you'd like to speak to us about our company dissolution service, please contact our London-based team of company experts on 020 3984 5387 or email cosec@firstformations.co.uk. For more company guidance and small business advice, explore the First Formations blog. If you have any questions, please leave them in the comments section and we'll get straight back to you. Be sure to subscribe to our channel to get more tips and advice on limited companies, reporting requirements, tax obligations and more. We're always happy to help and we can't wait to hear from you. Until next time, cheerio.